As usual, our disclaimer is that StratCraft is not financial advice. Today I wanted to discuss the core ideas why I set out to build this tool. I have a little bit of experience in the market, various assets, for more than a decade. In the past 3 years, I tried making trading decisions myself, and it did not go well. I did lose some money directly from just bad trading decisions, and I also lost from not being properly invested. The core ideas behind StratCraft is to hopefully fix all that. Now, instead of just going through all these core ideas here, I decided to ask ChatGPT to comment on whether this stuff is actually holding up or not. And this is what we have. Holding cash is not a great idea. Discretionary stock picking, buying, selling for retail traders, very bad idea. And I can surely attest to that. Concentration risk is really huge for retail. I did this myself many times. This is why in StratCraft, there is hardly any position that's above 1% of the portfolio. Usually it's much less than that. I used to be fascinated with certain markets, for example, crypto or real estate or gold. When StratCraft is trading the entire market, all of that is covered. If a trend emerges, the system is designed to get on board. Now this is being a tape slave, trying to catch the pump or the end of the dump is just very detrimental to health, to relationships, to work. It is just a really bad idea. And intraday action, I think, is really dominated by the high frequency folks. There are professional traders that are just very good at their game, and I know that I cannot do this. They also follow the market basically around the clock, and I'm not sure if they have any life outside of the market, and I definitely don't want to be one of those guys. I want to have the time for my family, my life, traveling. I don't want to be glued to the screen. On YouTube, you would find people with a lot of different systems. However, in almost all of the cases, those systems are not validated. I have myself followed some of those folks. It's kind of hard to tell what's working and what's not, because some of the people really have outstanding performance in the market, but it usually is not coming from the system that they're using. It comes from buying trends early, setting a wide stop loss, and sticking to the trade for a long time. Might be legitimately a good trader, and they're winning, and they have the track record, but their system is not why they're winning, because they're not applying their system to the entire market. They're only applying it to the winning assets before they start going parabolic. In StratCraft, the system is designed and backtested and optimized to minimize overfitting, fooling yourself that your system is working. Now, with those core ideas in mind, there are also some smaller ideas that came out of months of work on StratCraft, backtesting and trying different strategies. Initially, there was more than 20 strategies, I think. I just removed the hopeless ones. Overfitting is a really big problem in strategy development. And this is why I'm going for the simplest strategy possible with fewer parameters. Light GBM feature that I currently have here overfits very, very easily. So the simpler the strategy, the better. But of course, there is a flaw too. In the backtest, I think we have shown that it is possible to beat the market. It does require work, going to lower volume, providing liquidity where there is less of it, taking some risk. And this is what the investment strategy is ultimately paid for. Now, the golden rules of the two strategies that we have right now, ADX and ADR, are the same. So we hold the winners, cut losers, stop loss, and we let trends run. Now for ADX, we limit the trade duration with 60 days, and for ADR, that's much more than that. Now this is more of a psychological one. I did sit through some major drawdowns over the years. It was always hard, and it's always very tempting to sell the very bottom. To reduce the risk of disastrous human intervention, I prefer high Sharpe strategies over high return, because it's not just the strategy, there is also a human involved. I do have support for short strategies. In my limited testing, they tend to blow up randomly, and it is just hard to build a short portfolio that works. Even though most equities go to zero, it is still hard to have a reliable short strategy. Maybe one day it will be discovered, but I do not have it at the moment. In the engine, I used to have parameters that allow liquidating the portfolio on a certain drawdown, like 5 or 10%. We just liquidate and wait cool down period and then start again. And the optimizer ended up almost never using those parameters. So I removed this logic from the engine because my conclusion was that there is no fixed drawdown after which liquidating would be beneficial over the long term. I also tried filtering by minimum volume, so not trading stuff that is below 1 million or below 10 million, and that never improved the results. According to my backtests, the best risk-adjusted returns are in the small volume tickers. I also tried only trading a stock if the strategy has performed well on the stock in the past. And surprisingly, this also did not improve the performance. I also tried raising stops with different methods and none of them worked. So the best method with the stop is just to leave it where it is initially. At least these are my results so far. And so I'm happy that ChatGPT is happy that we're on a good path, and I totally agree. So simple and robust is what is necessary to survive in the stock market.